Hey there, it's Ryan Skaggs. Thank you for tuning in. I want to talk everything about tax time. So it is March the 1st. I'm making this video. Got 45 days for tax filing. We're definitely going to be coming into the summer season when potentially you've got escrow or tax bills coming out. So really want to share how to stay in front of these, what you need, and make sure that you are informed on what to do and how this information comes about. So I'm going to take you onto my screen here real quick. And first and foremost, the reason for the video is I created core values around my team, and you can see them there. Wow, everyone, client-centric and process-driven. So, that middle one, client-centric, everything that we do as part of, my team that I do is I want to be streamlined and easy to understand. And that very first one, wow everyone, I want to go past closing and make sure that you are informed of what those documents are, what the next steps are, what to keep in mind with taxes, because it really is important for me to create that relationship over the long term. So let's get into taxes first. So you likely got in the mail your 1098 for mortgage interest. And if receiving the 1098 for the first time, I put up in the top right what to think about, or what the different boxes mean. So feel free and pause it here, stop, pause it, and read through that. But this is the document that you want to look at, and this is going to show you the interest that you actually paid. And you may have multiple 1098s if the loan changed servicers in the calendar year. So if your loan was sold from one to another in 2020, then you're going to have multiple 1098s. Now put those together, make sure and have those ready for your accountant. I'm not a tax professional, I'm not giving tax advice, but with that said, you'll be able to see that. If you do see line 6, typically that is significant if you did pay any points, that you can actually deduct those. So again, talk to the CPA. If you go through TurboTax or whatever else, they'll help you through it. But this is the document that you want to look for, and this is very relevant going into April. So next of which, I'm just going to give you a quick example of Cook County. So a majority of my client base and where I live is Cook County. You can actually find this website, and I'll hit you up here at the end, but cookcountypropertyinfo.com. Again, I'll come back to that so you can see it, but this is how it looks. You input the address, the street, and then the city, and then you click on it, and you actually get something like this. You get a picture potentially of the home. This is my home from way before it got basically got rehabbed and changed and everything else. So this is from probably 2015, this picture. So they definitely have old pictures, but that doesn't mean they have bad information. So with that said, they've got your mailing address. Make sure that information looks correct. Now, again, I took this old picture and this old bill because there's no longer a bill on my property. It actually has a new PIN because of all the construction and what was done. But with that said, the exemptions, that is what I want you to go look at. Make sure you're getting your homeowner's exemption. So again, you go to cookcountypropertyinfo.com, put in your address. If you live in Lake County, if you live in Indiana, if you live in another state, I don't care. You can Google and say, whatever your county is. I grew up in Kosciuszko County, Indiana. I could say Kosciuszko County, Indiana property taxes. And I guarantee you the very top one is going to be the assessor, the treasurer, right? So you want to look at the treasurer that pops up and you say, pay my bill. You'd be able to view your bill or log in to view it, and you're going to be able to see a lot of the information just like this. You want to make sure that you're getting an exemption if you do live there, is that you're getting your exemption for your homeowners, right? So typically in Cook County, that's about a 7% decrease in property tax when you get a homeowner's exemption. If you do not have it and you think you should, give me a quick call, drop me an email. I'd love to be able to help you. You can always get in touch with your real estate attorney from your purchase. They could likely help you too. You could Google search it, Cook County property info is the way to get that, but you could actually go in and just say, homeowner's exemption. It's called a certificate of error, and you can actually go through and just complete a one-page form basically and send it in. So, but last but not least, this is the time getting into summer where we're going to have some people where we see property taxes increase, and we're going to see an escrow shortage. So I want to talk a little bit about this because this is probably one of the one of the concepts is really tough to understand once you get that letter, typically at the end of the year or once the tax bill comes out. So let's take a peek up at the top here. We've got an example of a $6,000 a year property tax amount. It's paid $500 a month, $6,000 in Cook County, March, and typically in August. 55% of last year's bill is due typically in March. So they do it the same way, 55%. Then the second half of the bill is, or the 45% is due later. Now, it never comes out to exactly 45% because that bill changes each year. But in this case, $3,300 goes out, $2,700 later in the year, and makes for that total of $6,000. Well, let's imagine that the property taxes went up by $100 a month, went up from $6,000 to $7,200. So what would that look like? Your new tax amount is $600. You actually have a shortage of $1,200 total, right? We said from $6,000 to $7,200. And when we look at that, that's $1,200 divided over $100 a month. You actually have a shortage of $1,200 in your escrow account. So not only does your new tax go up by $100, then you're short $100. So you actually have a total escrow of $700 when previously it was $500. So your monthly payment just went up $200 a month in that case. Okay. So whatever they're doing is they're basically looking at the previous year tax bill, and then they're looking at the new tax bill, and they're taking the difference between the two, between the $7,200 and the $6,000. They're dividing it by 12, and it's almost multiplied by 2, because basically you're saying, hey, you're X amount of dollars short, right? So depending on what's in your actual escrow account is why it's not a perfect math here. But what they're doing is they're saying, okay, you're $1,200 short. You need to increase your bill by $100 a month, and then we're going to divide that $1,200 over the next year. So therefore, you have $0 in shortage once you get to the end of the year, and then it starts all over again, right? Then at that point, who knows what the new tax bill would be. But that is why an escrow shortage is so important to make sure to stay in front of. And again, when you go to cookcountypropertyinfo.com and you see that your tax bill went up, you're going to know that your escrow is going to potentially be short next year. So make sure and start putting a little money aside, because you know that if that's going up, they're only collecting based on the $6,000, not the $7,200. And you're going to get a letter in the mail, lo and behold, and you can go, oh my gosh, Ryan told me about this, right? So stash a little away. Be cognizant of when that second bill comes out. In Cook, typically it's around late July, early August. Every county is different. And again, not tax advice or anything else or financial advice, but just some tips to stay in front of around this time and going into summer. So thank you so much for tuning in. Have a great day. If you have any questions on this, if you know anyone in the market, please let me know. You can send me an email, ryan@neighborhoodones.com. I am always willing to help. Thank you so much, and we'll see each other again very, very soon.